Afternoon, everybody. Uneducated Economist here. Wanted to talk a little bit about the bond market and maybe kind of lead into some building materials and stuff like that. Um, Wanted to talk a little bit about what I was reading earlier, and I'll leave a link down in the description for you guys to an article that was talking about how there is a big influx of American investors buying Chinese debt, if you can believe that. Now, it doesn't surprise me really, because I think that these American investors, these American bond investors, actually just bond investors in general, I shouldn't just say American investors, I should just say bond investors in general, are now seeking out that yield. They're looking for yield anywhere they can find it. Now, up until just recently, bond investors were speculators because they didn't really care what the yield was. They just cared the direction in which it was headed. So if, yields were continuing to go down, they were buying with that anticipation of selling it to the greater fool. But now we got yields rising, and the idea that you're going to be able to sell your bond off for a profit is no longer like in the cards. Yields are rising. So now the bond investor has to look at yield and say, okay, if I'm going to tie my money up for the duration of this bond, how much interest am I going to get off of this bond, off of this investment? And even the 10-year treasury being the safe haven asset at 1.7% interest, that's not a real good return to get for 10 years of tying up your money. So they're searching it out in other places, and that's why you're starting to see so much demand for the junk bonds, out for high-yielding debt. And that's why you're seeing a demand for Chinese debt, because it pays so much more than the 10-year treasury does. Now, this is something I kind of got to thinking about for a while. Why is the Federal Reserve allowing this to happen, right? Because I remember people saying that the Federal Reserve would never allow U.S. 10-year to go over 1%. Right, but here we're at 1.7, and I even hear some economists saying that they may even let it go all the way up to 2.5, which is like really blowing some people's minds. But is the Federal Reserve really allowing this to happen, and why? Now, I put out an argument there a while back about how I believe that the Federal Reserve was trying to funnel some money into these corporations so that the corporations can continue to, feed off of the debt and keep an employment going. Right? Because if these corporations can no longer take out cheap debt, now they're going to have to figure out a way to pay their debts, and the only way to pay their debts, if they don't have a profitable business, is to either sell their stock or cut employees or whatever they got to do in order to, meet their debt obligations. So I thought, okay, well, if the Federal Reserve just allows the interest rates to rise on the 10-year treasury, well, then the bond investor is going to be forced to seek out yield somewhere, and they're only going to find it in not only find it, but they find it in those junk bonds, which, then makes the Federal Reserve happy because now the market is taking care of, providing funding to the corporations, and they don't have to come up with some kind of weird excuse for why they would have to do it. But I got to thinking about that a little bit, and I was like, that really leads me to think about the time, because before all the COVID and everything hit, before the recession, I remember the Federal Reserve saying the way they're going to deal with the next recession is going to have to be, because, dropping interest rates really wasn't going to be in the cards for the Federal Reserve. So they were saying that it's going to take like the efforts of state and local governments to stimulate the economy. Now we have, obviously we have the federal government, stepping up with a bunch of stimulus packages and stuff like that. But that's easy for the federal government to do. They can just have Congress say, hey, we're going to do a bunch of stimulus packages, Treasury issue out debt gets sold, Federal Reserve prints up money and buys that debt. That's pretty easy to do. Wouldn't say easy, but, kind of easy to do. Not so easy for state and local governments to do, because they can't just say, hey, we're going to print up, a bunch of money and buy our own debt. And it's not like the Federal Reserve can really step in there and do it for them. So how does this, system work where you can get people to go and start buying, municipal bonds? Well, here it is. Municipal bonds are white hot market. Very interesting. So is the Federal Reserve allowing these interest rates to rise on purpose so that the perception of the bond investor will search out the yield and then find it in municipalities, find it in junk bonds? I think it happens to be a little bit of a side effect that is starting to flow over into China too. You kind of see where I'm getting with this? Now, a lot of people are screaming inflation. Like, they look at the yields rising on the long-dated treasury and they say, inflation, inflation. Look, there's proof of inflation. And to me, that's not proof of inflation. It's proof of people's perception that there's inflation. But it doesn't prove to me that there's inflation. And I see a lot of people are looking at lumber, and they're pointing at lumber, and they're saying, look, lumber's proof of inflation. You see the prices going up, how fast they gone up? I was buying it for this much last year, and look how much it goes for this year. That, to me, is not inflation. To me, that was a supply chain breakdown. Just like the toilet paper that cleared off the shelves. Was there ever a shortage of toilet paper in this country? Ever? You know that toilet paper shortage? It happened back in the 70s too. But it didn't happen because of inflation. It happened because people's perception out there. They went, oh my gosh, there's going to be a shortage of toilet paper. And they went out there and they cleared the shelves off of toilet paper. There was none to be had at the store. And if there's none to be had, supply and demand kicks in and people will pay any price for it. There was never a shortage of toilet paper, not in the 70s and not just recently. The reason there was a shortage is because so many people went out there and did a panic buying of it. And I have a feeling something very similar to that has taken place in lumber. Now, I've done videos for years talking about lumber. I work at a lumber yard. I deal with lumber prices every day. And towards the end of 2019, I was doing videos talking about mill curtailments, mill shutdowns. There was tariffs and all kinds of stuff taking place at the time, and the demand for lumber was dropping dramatically. COVID hit, and everybody thought for sure there was going to be no building, that nobody was going to be interested in building, that the demand for lumber was going to be in the toilet, and people started tightening up their inventory. They dropped the inventory levels. Mills were curtailing development again, even after the 2019 curtailing and mill slowdowns. So they did it again for COVID, and there was very little inventory out there. COVID hit, stimulus came out, people started buying up lumber. People started buying a lot of lumber. Housing market kicked back in, people were moving out of the city, moving out to the country, remodeling, fences, decks, all kinds of stuff was taking place, and it zapped the inventory levels. During a time that there was already a curtailing of development, there was a demand that kicked in, and the supply has never been replenished. It's not like some kind of conspiracy theory towards this, and it doesn't have to do with inflation. Now, if you want to use the inflation argument, here you go. Okay, I will give you the inflation argument. Interest rates are incredibly low. Building is still in high demand. Inventory is very low. The amount of money that is going into building supplies right now is very high, coming from credit. See, people take out loans, and those loans go to buy building materials. The person who is paying for that does not care what the individual piece of lumber cost. All they care about is the bottom line, whether or not they can make that bottom line payment. So when you have a lot of debt going after a very small amount of supply, the prices will go very high. And like I said, if you do not have to go out there and actually earn the hourly wage to go buy a sheet of plywood, but all you care about is whether or not you can make the bottom line payment, that price can go anywhere. The credit is buying it, not the individual's hard work. I mean, the individual's hard work will pay for it in the end, but that's not who's buying it. It's the flow of credit that is buying it. And that flow of credit is going into a very limited supply. If there was a lot more supply out there, if there was this big giant abundance of supply and everybody was just loaded up on it, the amount of credit that would buy into that supply would not be as effective, and the prices would come down. You see where I'm getting at here, guys? Once these interest rates rise up and people get discouraged about spending that money, making that bottom line payment, and that flow of credit stops flowing so dramatically into a limited supply, those prices are going to dump. And I can already see it taking place. How much higher the prices could go from here, it's anybody's guess. I have no idea. But I know the demand at $58 a sheet coming from somebody who has to actually earn the wage to go out and buy it is very low. So as long as that flow of credit can outpace the amount of supply out there, then yeah, I see the prices staying up. But once that flow of credit no longer can, outpace the amount of supply, the prices will come down. And what is everybody going to use for an excuse when the prices come down? Is it going to be inflation? Is it going to be disinflation, de-inflation? I mean, what are they going to say when the prices start to come down? I'm going to say the supply is starting to pick back up. Well, everybody else is going to have to come up with some other reason. But that's me. I see what's going on here. All right. Uneducated economist, you guys let me know.